Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend Matt, the lumberjack landlord. How you doing, buddy?
I'm doing super awesome. Ready for number 3.
Yeah, so I think we're heading into winter, both seasonally and in the economy. We got Jamie Dimon out there scaring people. We've got Stanley Druckenmiller. We've got all these billionaires talking about pain is coming. So I thought you and I should talk about 2023 and kind of guess some key numbers. And you're the guest. We'll let you go first. But part of my Halloween decorations, did you notice you got my little Halloween decorations behind me? I got
Yes.
Boo up here. I also have a crystal ball. I know that's so tacky, but hey, I bought it, so I had to show it. Now it's a tax write-off. So the first thing I want to talk about is unemployment. Unemployment, which we're going to talk about U3, right? The most often number, was last read at 3.5 last week. So what will be the highest unemployment rate published next year? Just again, it could happen any month. What do you think the highest unemployment rate will be U3 next year? What do you got?
5.5.
Wow. So 5.5. So that's not too bad. That's up. Oh no, 5.5. That's up 2%.
Yeah.
Woo.
Yeah.
Wow.
Yep.
Certainly possible. That's an aggressive run up.
It is.
I'll go 4.9.
Okay.
I'll go 4.9.
Chicken.
I think, yeah. Yeah. I mean, we could get. I mean,
I
get
just
to
I think
5.5.
I mean, yeah, you look at it and it's like if all of these layoffs happen, if all these slowdowns happen,
I like it.
5.5 in general look isn't really a bad number.
No, I mean,
It's
no,
horrible compared
6%.
to where we are.
Yeah, 6% was full employment for forever.
Right.
All right. So okay. So let's talk about the Fed funds rate. Fed fund rate last reported, I think, was 3.25, right? 3 to 3.25. I think generally speaking, they think it's going to go to up 75, right? They're currently calling a terminal rate of 4.5. Where do you think they peak Fed funds rate next year? Anytime?
I think they peak at 4.5.
Ah, okay. I'm writing these down. I actually think they're going to 5.
Okay.
Which is really interesting. So again, that's really interesting. So you think unemployment's going to tick up faster and thus they'll stop sooner. I think unemployment will be delayed and thus they will go higher and break shit. Okay.
Oh, I think they've already broken stuff. I think it's like the 3-year-old that had their tantrum, broke everything, walked out of the room, then came back and just stomped on it for good measure.
Break it again.
Yeah.
Oh, it's not small enough. Break it again.
I found 3 pieces that weren't fully broken. I'm going to break those too. Yeah, that's kind of the way that I see this going. I think everything's happening faster.
Yeah.
Right.
Yeah,
I think
true.
everything's
No, there's
faster.
definitely true.
So that's where it was kind of like, I thought, when we were talking about number of transactions and I was like, man, I think we break through 4. I think we get into the pace of 3.
Yeah.
And I think that that's the pace for next year. And I think that we start to see, because it is a lagging indicator.
It is.
I think we start to see that stuff take shape next year with home inspectors, with mortgage brokers, with real estate agents. I think we really start to see that part of the economy, which is so massive, right? It's like 15% of the economy.
Yeah.
I think that that's really where we start to see a lot of the pain.
All right. So now we're going to talk about owner occupied 20% down best credit mortgage rates. I believe the peak that I've seen quoted over the last month of average was 7.08. Where do you think that peaks at in 2023?
8.
8.
I think we get something with an 8 handle. Yep.
Oh.
Yep. Because I think that, and the only reason I think that it peaks at 8 or, high 7s, low 8s.
Well, no, you can't. Now you're changing.
8,
now you
8. So 8.
Okay.
8. We'll say 8.
Okay.
So let's just say 8. So we're at 8. The only reason that we get to that is because they tick up and they don't take anything out of the spread.
Yeah.
So the spread remains, but then we don't actually see a back count in number. What we actually start to see is a reduction in spread, because the spread right now is way higher than it ever was.
It's 3 deviations. And again, what is he talking about? The spread, the margin between the Fed funds and the rate. And the reason some of the spread there is they're actually calculating in refi risk. People are going to refi out of these rates right in the future. So you're going to say 8. I'm going to say 7.9, which is really interesting. Um, I actually think they go higher on the funds rate than you. But I'm calling a slightly lower mortgage rate, really for the same thing, is that spread's got to collapse.
Right. I think that spread comes in. I think that rates can't go much higher, i.e. they can, but I think that they'll reach the point where seeing that they broke stuff.
Oh
And
yeah.
I think at that point, the margin starts to compress, but I think the number's so high. And then let's face it, at this point, capitulation isn't down. Capitulation is they don't raise.
Yeah, exactly. Exactly. All right. How about apartment rents, right? We got a big number from apartments.com that Q3 rents were down like 0.6%. This is not home, single family apartments. You and I, or at least I've been talking about that as a huge risk I see coming. I think they had 2 years of unseasonably high, and now it's time to pay up. Do you see apartment rents? What percentage do you think again, nationally speaking, there's always exceptions, but what do you think apartments rents do next year?
I think in like the big stuff like that, I think you'll probably see down. I think you'll see down, 10%. I think it's gonna be a
Okay.
big number.
Okay.
Well, yeah, because here's the thing. What do those big places do to get you in?
Yeah.
They give you a
Yeah.
first month's rent free. So
Yeah, I
then
think
if you have
that's,
to,
yeah.
if you have to
Yeah.
average that over the course of the year, there's your number, or
No,
pretty
you're right.
close, right?
Yeah.
So I think the other thing too is, but I think where it saves it from the overall rent number is that I believe small multifamily, single family 2, 3, and 4, those are up.
Yeah, I do. And again, the beauty of the debt structure, right? 30-year fix, all of
Correct.
that. So I'm going to
Correct.
call negative 5%, because again, I think you're right. I think a lot of supply is coming online in certain areas. But again, I think part of part of the problem that's going to keep rents from going down 10, my opinion only, is just the fact that housing's unaffordable and more people get no answers from a bank. So it's kind of
Mhm.
weird. Let me pull up what is the S&P 500.
But I think that creates demand in those small multifamily assets.
Oh, yeah,
Because
yeah.
living in those, 400 bed, or 400, unit things is
Mhm.
less expensive.
So I'm looking at my phone today. We're going to call the S&P 500 3600 for an easy number today.
Okay.
Where do you think, what is the lowest print in 2023? Do you think, yeah, where do you think,
I think
again, we are not stock guys, so let's just
no, this is purely a wag.
wild ass guess.
There you go. I think we break through
Under 3?
3,000. Yeah, I do.
I will agree with you. That's the first time I've agreed with you. I think we go sub 3,000.
I think the pain has only just begun in those tech stocks with the really heavy, price multiples. 17.
Capitulation hasn't happened.
Yeah, like you don't need 17 times earnings. People are going to be buying stuff at 11 and 12.
Yeah, and again, software stocks, right? Again, I've lived through cycles where essentially buyers need it, but they're like, we're gonna wait 6 months.
Yep.
Right? It's just like freaking all hell and
Yeah,
pipeline.
and you have the conversation like, what's the cost of waiting? And they're like, we're good with that.
Yeah, by the way, it's not a cost of waiting. Is if we buy this, we don't make payroll. Well, I guess you're not buying it.
Exactly.
Right? I mean, it's like, well, sorry, Mr. Sales Manager. They can't buy my stuff because if they did, they'd have to go bankrupt. And that's,
Well,
I've lived through that.
sales tip though, is you find the companies that you think are going to absolutely obliterate themselves and have a horrible quarter. And you just say, listen, throw everything in the kitchen sink in that quarter, buy this stuff now, start the turn. You're going to take the loss, just take a bigger loss and
write it all off year one.
Exactly. And this thing can actually help you get back on the road of profitability.
Yeah, absolutely. All right. So now let's talk about single family home prices. Right.
Yes.
So by next year, by next December, what will the year-on-year single family median home price reported by National Association of Realtors be? Will it be up, down? What kind of number do you want to put on it? This will be December 23.
It's going to be down. I just don't know how much. So I'm calling for 10 to 20% by the end of 2024.
Right. So 2 years. But what do you think happens the first year?
But I think next year is when we get a majority of that.
So call it 6, 7?
I think it's going to be close to rivaling. I think it's going to be close to rivaling 09.
So the worst year, 8%. Yeah. So let's call it 8%.
I think we're going to be right. I think we're going to be in that. I think it's going to be shorter. I think that the pain is more broadly based because it's rate based. and it's not local economy based, if that makes sense.
Yeah. So I'm going to call 0. I'm not
I
going
know.
to change. I'm not
I
going to throw out a
understand.
negative number. All right.
I
How
understand.
about transactions though?
Oh, dude, still that 3 million pace.
So what's the lowest? Because again, what people don't realize is when we talk about 7.2 or 4.3 or 3.7, those are annualized numbers, right? So they take the total month, they add some seasonality, they create an annualized number. So what is the lowest annualized number, again, reported any month next year? What do you think?
300.
Oh, it'll be in the millions.
Yeah. Well, I mean, so no month or annualized.
So again, they're monthly numbers, but annualized. So it'll be,
Yeah,
we're talking about the annualized number.
3.6. Yeah, so I think it's 300 is the lowest month.
Oh, so then
my point.
okay,
Yeah.
got it.
Yep.
So
yeah, 300 is my lowest month. Correct.
3.6. Ooh, that's a good number. 3.6 million. That's a really good number because that's exactly down 50%.
Correct. And so
That's
I think I think we have a month that kind of, I think we could break through that, but that's a month that I think we see. I think we see 300, 310, 320. I think we see that a bunch of times next year. We could get a shock in the 2s. We could get a shock in the 2s.
We could,
but I think that we see a lot of months in the 3s next year.
Yeah, I got to call 3.62. I think we've disagreed on lots of things. The 2 that we both got is transactions. I do think we get an annualized number of 3.6. That'll be the low water mark. We'll get lots in the 3s, but I think 3.6 will be the low. We agreed on the S&P going sub 3,000. Again, we aren't stock guys, so who the hell knows? Don't listen to us. Where we disagreed was unemployment. You thought it would peak at 5.5 sometime next year. I called 4.9. You thought the terminal rate on the Fed funds would be 4.5. I called 5. You think we'll see an 8 sometime next year. I thought we might peak at 7.9. You thought apartment rents would fall double digits. I thought half that. And then finally, you think we'll get the lion's share of negativity next year on home price at -8. I'm going to call it flat at 0. So this has been a lot of fun. We'll see what's what. I'm sure Millennial Mike will slice and dice this in about 6 months and just show how wrong we are, which is always fun. Where can people find you?
Lumberjack Landlord on YouTube and Instagram, as well as live streams on Sundays at 11:30 a.m. Eastern time. Bring your questions.
Awesome, buddy. Thanks again.
Thanks, Mike.